Hello guys, welcome back to our YouTube channel.
In this video, we'll be analysing some CAD pairs. I'm going to do NZDCAD and it's going to do Great British Pound CAD.
But before we get into it, make sure to like, comment and subscribe and turn on post notifications so you don't miss any more content.
So let's get into it.
Right guys, so I'm going to be talking about GBPCAD, doing some top-down analysis ready to go into next week. So starting on the weekly time frame, we've got in our psychological levels. So I've got one at 1.82 and one at 1.78, one at 1.68 and one at 1.60. So it's like we've got a nice resistance level up here, which we'll talk about in a second. And then we've got these two mid-range levels at 1.78 and 1.68. And then we've got a lower support level at 1.6. So the reason why I've got in 1.78 and 1.82 is because, as you can see, 1.78 is still being used as resistance, and it's been used very recently as well, where sellers have stepped in. But the reason I've got in 1.82 is because you can see over here at this level in the market, if I just highlight it, we did have a big false breakout. So we saw a slowdown in momentum at 1.78. Then all of a sudden we saw this big bullish engulfing candle to the upside, and then all of a sudden a big drop straight afterwards. So that to me just shows that that is one big false breakout, where we have previously seen it being used as support at the same level. So we know that is also a key level. But then most obviously we broke to the downside and then we pulled back and we used 1.78 as resistance. And we've still been using it as resistance. In my opinion, it's the stronger resistance level. So yeah, weekly time frame, we have now rejected this 1.78 level, and looking at the candlesticks on this time frame, we have closed now as two bearish engulfing candles. So this just amplifies the pressure that we have from sellers at the moment. And I can see in the long term this pair coming back down to this psychological level of 1.68. But of course, we're going to go down to the lower time frames to actually find our positions. So let's jump down to the daily time frame. Now, the daily time frame is where we can actually start to look at the structure of the market, looking at the highs and the lows, and seeing where the market structure shift has taken place. So I've got this trend line drawn in just to visualize the direction of the market. It's not the cleanest of trend lines, and they never will be, but this is just in place to highlight the higher lows in the market. So we've got this level here, 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 and also there. So as you can see, we have broken out of this market structure. We have seen visually this push away from this trend line and from this market direction that where we was going to the upside. We've now seen this push away to the downside. We also have this zone in the market where price has been using it as both resistance, and then support again. So this is a significant level, an area of sensitivity throughout the market where price has been using it as both support and resistance. And we've now seen this violated by this strong bearish engulfing candle to the downside, which has completely broken through this level. So that is one thing to take into consideration. We've seen a nice break to the downside now. Let's jump down to the 4 hour because we can see some nice market structure on this time frame. So 4 hour time frame, what can we see? Well, it's clear that the market is downtrending. We are in bearish market structure ever since this rejection up here of the psychological level of 1.78, where it's basically a head and shoulders pattern, with this side being the left shoulder. We've got the head, we've got the right shoulder, and ever since then we've just been making bearish impulses followed by bullish corrections. As you can see from the market structure, that sellers are clearly in control. If you look at this push to the downside, it's very impulsive, and then following that we have this very corrective bullish market structure, and then again we have a nice bearish impulsive move to the downside, and again a very corrective bullish market structure, and then once again we have this very strong bearish impulse to the downside. So that just symbolizes how much sellers are in the market and how we're just basically continuing with the trend. The trend is clearly down, sellers are clearly in control, so we're looking just to capitalize by following the trend basically. So now we've had this impulse to the downside. We're pretty much now just going to be following this and looking for a pullback back into this level. So what we're going to be looking for going into next week is basically a retracement. So something similar to what we've seen here, where we've seen this correction, where it's just been using previous support as resistance, is what we're going to be looking for, where we're going to be looking for a pullback into this region to then look to take longer term short positions. Now, we obviously need to be careful when we're pulling back, because we don't know yet where we're going to pull back to, because the market hasn't shown signs that it's pulling back yet. So when the market does decide to start pulling back, we can start adding other confluences like a Fibonacci level, Fibonacci retracement. So right now we can't really draw it because we haven't started pulling back, because we don't know if the market's going to go down a little bit more and then pull back. So when that does happen, we can start to draw on our fib to potentially say we could pull back to the 38, the 50, the 61.8, just to add some extra confluences for a stronger area for price to pull back to. But as of now, where do I think price is going to pull back to is around this psychological level in between 1.745 and 1.75, because it is a psychological level. So anywhere in between there is where we can expect to see price pull back to. So with that being the case, we need to ensure that stop losses are in a safe place above structure, above some key levels. So in terms of targets, because of course we did say price is going to, in the long term, head all the way down to 1.68, but of course we can't really be greedy. We need to ensure that we're aware of where the market might reverse on us. And if I was to look in the market, I can see that there is a significant level through here at this psychological level of 1.72. If I just draw a zone through here, you can see that price has been using this level as support previously. So that's where we will be targeting to start with. That's where we'll be looking to take our profits, because there's no point being greedy all the way down to here. If we see price starting to reject this level, then we need to take our profits. And then what we're going to do after that is then wait for a break of this level and then look for a pullback to that level and just continue with the trend that way. There's no point catching one big position all the way down here when we can split it up into 2, 3 and just secure profits along the way. So yeah, this is basically GBPCAD broken down into next week.
Right, guys, I'm going to be breaking down NZDCAD going into next week. We're starting on the weekly chart and then working our way down, doing top-down analysis. So starting on the weekly, what can we see? Well, we can clearly see that previously in history, price made this double top at this level. Because as you see, price came back and tapped into this level twice, and that's the psychological level of 0.926. Now, after a period of time, we start to see price slowly start forming this bullish market structure and heading back in towards this level where all the orders were at before. As you can see, we've had multiple wick rejections in around this level. For example, this pin bar is a perfect example where price broke above this level and then we actually closed below it. It identifying to us that the sellers are key at this level of resistance, and now we're looking for that continuation to the downside. We can see this with the 2 weekly candles being bearish engulfing candles. As you can see, this area here of consolidation, which on the smaller time frames, I'll tell you exactly what pattern this is. This consolidation area, we're now looking to escape it with these bearish engulfing candles. As you can see, they're closing below all this area of consolidation. And also this evening star here is a very nice reversal in the market. So let's jump down to the daily chart. Boom. So as you can see in the daily chart, it looks like we were in one big massive rising wedge. If I can just show you here, we got a touch here, and a touch here twice. So identifying that it's very respected. And we also got this lower trend line here with 1 touch, 2 touch. We also touched it here, but then this daily candle, as I can zoom in a bit closer, this daily candle, as you can see, we formed another evening star, absolutely breaking out of this downtrend. Breaking out the rising wedge and this trend line, and also breaking this psychological level here of 0.9. Very, very key level in the market. You can see here we had a massive reversals here, used it as support here, used it as support again, but now we've broken out of it. So just be interesting to look into next week of seeing some sort of pullback back into this level to then see that further continuation to the downside. And like I was saying about this pattern here, this area of consolidation was forming a ascending channel. And what that is it's ascending back into key levels, and then we see a massive reversal on the 3rd touch of it. We've got 1, 2, 3rd touch, and boom, we had that massive reversal to the downside. So now let's jump on the smaller time frames as well to try pinpoint how we're going to pull back and what things to look out for. So this is the daily chart. Let's jump on the 4 hour. Yes, on the 4 hour, it looks just a lot more high def version. You can see everything in a lot more detail. You can see the ascending channel. and you can start to look at how these key levels played out in the past. You'll see that 0.9 historical level used it very, very nicely in around here with a triple bottom. So going back to this level here, this is what's key now, because this is what's in the now. This is what price is doing now. So this is what is important. What can we see? Well, we can see that price is clearly downtrending. As you can see, we've got two touches at the moment. So what can we potentially see? We might potentially see a push back into this, give us that third touch of a trend line, and then see that continuation. We could then see the pullback forming some sort of bullish market structure, very similar to what Ant was talking about in the Great British Pound CAD one, where you can see these bearish impulsive moves, and then you can see this bullish correction. There's a big difference. And now we're having another similar impulsive move that's shown here. We can then see another potential bullish correction back up to this region, something along these lines, to then look for that further continuation to the downside. And also, once again, price hasn't shown any reversals as of yet to push back up into this region to look for sells. So Fibonacci levels, once we do see that type of key reversal, we can start to draw them in. And by looks of things, we might potentially see a 38.2% fib retracement back into that region if price wants to come back a bit further. And what this will identify that we're in a strong trend, and that price is a strong trend, and we'll just boom, tap and go. So you've got to be very cautious with this type of trend, because it can just leave without you. You've got to be on the ball. And what it also looks like as well is that we might start looking some sort of form Elliott wave theory, where we're getting the 1 down here, 2 up here, the 3, and then we'll catch in the 4th wave back up to look for that 5th wave back down. And that's something we can look out for as well. We've got that first impulsive move, correction, our 3rd wave, another correction, and then I'll look for that 5th wave to the downside, completing that Elliott wave theory. So yeah, I think this is everything to mention about this pair going into next week. The bearish market structure is absolutely high right now, so we just got to try to capitalize on that bearish momentum and look for these sells in going into next week. So yeah, this is NZDCAD going into next week. Thanks guys for watching our video. We really appreciate all the support you have given us.
If you want to receive analysis like that on a daily basis, or just get some guidance on your forex journey, click the links below. We have a premium group, and we also have a forex course that you can get involved with.
So see you next time.